The focus of this video will be on how to pay taxes on profit from selling a home. And so we'll need a Schedule D, and we also need Form 8949. So for this tax situation, we have a couple filing, Mary filing jointly, and their names are Larry Jones and Mary Jones. So for the husband, his income for year 2023 is $45,000, and his federal income tax withheld is $4,000. And for the wife, her income is $50,000, and her federal income tax withheld is $5,000. Their combined income will be $45,000 plus $50,000, which is $95,000, and then their combined federal income tax withheld is $4,000 plus $5,000, which is $9,000. And then also in 2023, the couple, they also sold their house in 2023, and they received this Form 1099-S, and they sold it on July 1st, 2023. And the gross proceeds from selling the house is $280,000. And so notice that when a house is sold, we report the Form 1099-S, the sale of the house, on Form 8949, and also Schedule D. And then also record that for stocks trading, we also receive Form 1099-B, and both Forms 1099-S and Form 1099-B, we report them on Form 8949 and Schedule D. And so we report both Form 99-S and Form 99-B on Form 8949 and Schedule D. And so for this couple, the home's basis, they bought the house back in 2014, and they paid $106,000 for the house. And then when they sold the house, they also had selling expenses altogether of $10,000 that were not included on the Form 1099-S. And so the gain would be the gain from selling the house. The capital gain from selling the house would be $280,000 minus the purchase price of the house, $106,000, and minus the $10,000 selling expenses. So that'll give this couple a capital gain of $164,000. From selling the house. So this is a gain. So this is profit. And so the question is, this couple, do they have to pay taxes on this gain of $164,000? And the answer is no. As long as they meet these two conditions, then they can claim up to a $500,000 exclusion, meaning all this $164,000 will be tax-free up to $500,000. And his condition number one is that they lived in this home for at least 2 of the last 5 years preceding the sale of the house. The house must be a principal residence and not an investment property. And so as long as they meet these two conditions, they can exclude the $164,000 gain from income. And so the $10,000 expenses for selling the house, what are they? They include things like legal fees, escrow fees, advertising costs, real estate agent commissions, title insurance appraisals, home inspections, survey fees, utility installation charges, And then also home repairs made 90 days prior to the closing date to sell the house. The closing date of selling the home. And then also things like property taxes, mortgage interest, or points. These are deducted on Schedule A, and they will not be part of the selling expenses. And to report the proceeds and all the expenses, and they will report the sale of the home on Schedule D in Form 8949. So this is Schedule D. This is the same form that's used to report stock trading. And this couple, the house that they just sold, they lived in the house for 10 years. And so this will be the gain from selling the house will be long-term capital gains. And before we filled out Schedule D, we have to fill out Form 8949 first. And again, the capital gains from selling the house is long-term, since they lived in that house more than 10 years. So we need to fill it out in Part 2, long-term. So when we go to Part 2, the first thing we need to do is decide whether to check box D, box E, or box F. So we check box D if the Form 1099-B or Form 1099-S, in this case, recorded both to report Form 1099-B or Form 1099-S, we use the same form. And so in this case, we have Form 1099-S, and then the was also reported to the IRS. If that's the case, then we check this box D. And then we check box E if the Form 1099-B or 1099-S was not reported to the IRS. And then we would check box F if there are transactions not reported to us on Form 1099-B or 1099-S. Recall that this couple, they have $10,000 worth of selling the house, worth of expenses from selling the house that was not reported on Form 1099-S. And that's why we mark box F. And then in column A, we just put sale of home. And then when did they purchase this house? They purchased it on May 1st, 2014. And then when was it sold? The house was sold on July 1st, 2023. And then the proceeds is from Form 1099-S is $280,000. The cost or the basis in this case is the purchase price of the house is the $106,000. And then we'll call them F here. What do we put? These codes. In column F, first we would put in the code H. That's for selling the house. And then since in this case there are expenses that were not reported on Form 1099-S, and so we need a code E so that the IRS know that there are expenses that were not reported on Form 1099-S. So that's why we have codes E and H. And then the column G, this amount right here is a little bit involved, and so this is how we come up with $174,000. So what's included in column G is the selling expenses, also the amount of exclusion. Recall that they sold the house for $280,000, and then minus the basis or the cost of purchasing the house, and then minus the $10,000 expenses, which leaves us with $164,000 of capital gain. And so in column G, that's what's included is the $10,000 expenses and then also the $164,000 exclusion. Recorded for a married couple filing jointly, they can exclude up to $500,000 on capital gain from selling a house. In this case, they excluded $164,000 and then plus $10,000, which makes $174,000. And we also put the $174,000 in parentheses to include that these are non-taxable money. Also included the exclusion and then expenses. So that's why we put the $174,000 in parentheses to indicate that it's a negative number. It's not a gain, because all of it is all of this is from expenses from selling a house and also from capital gain exclusion. And then column H would be just column D minus column E and then plus column G, and that will make it 0. And then we just move everything down to line 2 here. 280,000, 106,000, 174,000 negative, and then 0. And then once more, notice that we marked box F because we need to know which box is marked for Schedule D. So we have long-term box F. So when we come back over here, which is Schedule D, so we go to the long-term part, which is part 2, and then right down here it's a total all transactions reported on Form 8949 with box F checked. And so that's what we did over here in Form 8949, box F. And so now we will use line 10. So the proceeds will be $280,000. The cost or basis is $106,000, and then the adjustment is $174,000. Once again, the $174,000 is $10,000 of expenses from selling the house, and then the $164,000 from the exclusion. And then column H is just 0. And then we don't have anything in here on line AB or line 9. Line 11, there are no forms of 2439 or 6252. Line 12, no Schedule K1. Line 13, no capital gain distributions. And then line 14, no capital losses, no capital loss carryover from last year. So line 15, just add all of this together, and then we get 0. So for short-term, part 1 is short-term capital gains. We don't have anything, so line 7 is 0. For long-term capital gains, line 15 is also 0. So line 7 is 0, line 15 is 0. And then line 16, combine line 7 and 15. We don't have any, so it'll be 0. If line 16 is 0, skip lines 17 through 21, and then enter 0 on Form 1040, line 7. So this is our Form 1040, line 7. We enter 0. And then go to line 22. Line 22, do you have qualified dividends? This couple does not have qualified dividends or long-term gain or long-term capital gain. So the answer is no. And now we go to Form 1040 and then complete this tax return. So here's Form 1040. So here we have the name of the husband and then Social Security number name of the wife, and then social security number. Filing status, married, filing jointly, no digital assets, they're not born before 1959, they're not blind, no children. The combined income from the W-2s is $95,000, and then no other income here. So line 1Z will be $95,000. And then nothing from taxable interest, dividends, or anything here. So nothing here. And then line 7, that's from the sale of the house from Schedule D, and it was 0. And then no Schedule 1, and so 95. Line 9, the total income would be $95,000. No Schedule 1 here. And then so line 11 is subtract line 10 from line 9, and this will give them the adjusted gross income of $95,000. And then there's then the deduction for married filing jointly for year 2023 is $27,700. And then line 13, no Form 8995. So line 14 is combined line 12 and line 13. So the total deduction is $27,700 here. And then line 15, which is the taxable income, would be $95,000 minus $27,700, and that will give us $67,300. So this is the taxable income. Now we need to go find the tax for this. So we can go to the tax table. So here's the tax table. And so just scroll down until we see 67,300. So this is 67,300. This column is for single filers, and then this column is for married filing jointly. So the tax will be $7,639. So the tax for this couple is $7,639. And this is what we have here. No Schedule 2, line 18, combine line 16 and 17, we have 7,639. Line 19, no child tax credit. Line 20, no Schedule 3. Line 21 is combined lines 19 and 20, so we have 0. And then line 22 is subtract line 21 from line 18, and we have 7,639. Line 23, no self-employment tax, so it'll be 0. So their total tax is $7,639. Line 25A, this is the federal income tax withheld from the W-2s. It's $9,000. And then nothing here, so 25D will be $9,000. Nothing on 26, and then no credits or anything here. So 32 will be 0. So 33 is the total payment of $9,000. So in summary, this is the total tax, and then this is what they already pay or withheld. And so the difference will be 1,361. So we do 9,000 minus 7,639, and we have $1,361. This will be the refund. And once more, if you would like to file this tax return online for free, completely free, totally free, then the IRS has what's called IRS fillable forms. Just go to Google and then Google this, and then you will get to this page, and then log in and just you would need to input the information from 1040 from the Schedule D from Form 8949, and also information on the W-2s. And in summary, the focus of this video was on how to pay taxes on profit from selling a house.